Falling house prices is stopping people from refinancing. Let's have a look. Hello everyone, Florian.Heise here and welcome to another episode of HeiseSays. I've got my stein of coffee and I thought we'd have a look at this article from the ABC for a couple of reasons. One, that it's quite interesting because our cash rate is, well, so low I haven't bothered to update this chart for some time. We're at 0.25% and it hasn't moved since then. And word on the street is that it's not going to move until our unemployment goes back down to a reasonable level. Right now it's sitting at 6.2%. Their predictions unemployment will hit even higher. If we have a look here, I think the real most concerning figure is the Roy Morgan data, which say it's telling us that underemployment and unemployment is a quarter of the workforce. But so often you'll have, interest rates are down, people want to save money, they want to take advantage, they want to refinance their mortgages. I was talking to a broker the other day, mortgage broker, and he was telling me that you have people approaching him going, oh, we want to get this cheaper rate, we want to take advantage of this. And he was saying, you do the numbers and you go, guys, I couldn't even get you the mortgage now that you have with the money that you're making now. So it shows you some of the issues that people have. And now banks are becoming more risk averse, even though they're giving everyone a mortgage holiday. Some people in the comments were saying, yeah, that's just them protecting themselves, which I tend to suspect. And as a small business owner, I remember when I went through the process of consolidating everything together, consolidating the loans, we'd had a capital gain on the house, and, well, not a capital gain, the valuation went up, so LVR was down, so I wanted to, reduce our interest. And that was a bit of a pain. All the hoops, they had to get a specialist person in because we were a small business. And I'm going, this is crazy, guys. This is before I spoke to the broker recently. This is crazy. I'm applying to reduce my cost, reduce my expenses. Why should it be so painful? So it's interesting to see some of the challenges. And we'll have to see if what this says, how many people won't be able to take advantage of these lower rates. How are you going, guys? I make a habit of every quarter ringing up the bank and just trying to get my rates down a bit lower. Even if it's a little bit. I'll have the phone in while I'm doing another job because you've got to sit there for an hour. I think last time I saved about $80 a year, but still, hey, it's $80. I think it was a bit more than that, but nonetheless. So let's have a look at this. Mortgage refinancing surges as interest rates dive. But can you get a home loan during the pandemic? Swarath is smiling all the way to the bank. She just saved thousands of dollars a year on her 2 mortgages by taking advantage of competition between home loan lenders who are keen to lock in customers as the country buckles down for a recession. Ms. Ruth has an investment property in South Melbourne and a second mortgage for the home where she lives in Sydney's inner west suburb of Ashfield. Until recently, both mortgages were with separate lenders. We started to explore options to refinance in November or December last year, but only finalized things in the last month, she told the business. Timing worked in her favor. After she began looking to refinance, the Reserve Bank, in its efforts to ward off the worst of the economic crisis unfolding from the pandemic, dropped the official cash rate from 0.75% to the record low rate of 0.25%. It meant banks were also dropping their rates. She ended up saving 1.2% of her investment loan and 0.2% of her owner-occupier home loan. Oh, good on her. Which is a massive drop. So definitely the rate was a big motivation for me to shift over and go through the whole process, she said. The new deal was also sweetened with a $4,000 rebate from her new lender, which also definitely helped boost the saving, she said. I mean, that's smart. People taking advantage of the market to get a saving. Good on her. Good on her for doing that. It's nice to see an article where people are doing good things, not like, Joe football player. Oh, I'm putting all my money in the stock market, and just hoping it works. That's my strategy. This is good advice. Make the bastards work for the free money they earn. I mean, come on. Come on, guys. So a rate war expected to intensify. Smart Move mortgage advisor Michael Leitz said banks were working hard to attract new customers and keep existing customers. The banks have started to offer attractive rebates, and fixed rates are quite low and very attractive. So naturally, there's been an influx of inquiries. Refinancing would normally take me around 30%, would normally make up around 30% of Mr. Leitz and his college workload. But in the past few months, he said it has made up about 70% of his work. I need a shot of coffee. So there you can see, people are taking advantage of the lower rates to refinance and to make the banks work for it. Typically, if you're at one bank to move across, you're looking at about $700,000 to $800,000 by the time you factor in registration costs and their processing fee. So with the $4,000 rebate, you're still ahead, he explained. Australian Bureau of Statistics data showed the number of people refinancing their home loan rose 11% from March to April, and the value of those loans rose 50.9% year on year to $7.9 billion in just 1 month. It was a different story for new mortgages, which were down 4.8% in April. So here we're seeing, because you can look at the number of, the data, here we're seeing what's really happening. People aren't taking out new mortgages, they're refinancing like anything they can. All to save costs, hopefully. Comparison website ratecity.com.au research director Sally Tyndale said borrowers were currently the ones with the power. Australians are increasingly starting to realise they have to act on their mortgage if they want to save money, she said. We expect this rate war to intensify despite the fact mortgage rates are already at record lows. So, here we go. Falling house prices keep a lid on new loans. And there's the problem. I mean, house prices have shot up, and I'll bring up this data. We can just see the growth in houses and the property prices since September 2005 to now. And you're going to be able to refinance if you're in negative equity, everyone. Or you're going to be stuck at a high interest rate. There's the question. This week's unemployment data from the ABS is forecast to show an increase in the jobless rate, with Treasury now expecting it to top out at around 8% this year. That would be a negative for dwelling prices, and it would mean that we would see dwelling prices being soft or falling over that time period. Property analyst and founder of SQM Research, Lewis Christopher, said, a higher unemployment rate is a big driver to push down property prices. The reality is, if you have many, many thousands of working adults not being able to find a job, that's many, many thousands of would-be buyers who cannot buy, Mr. Christopher told the business. Let's call it straight now. The market is falling as we speak, and there is no question about it. UBS and CBA both predict house prices will fall between 5 and 10% this year. We would then expect prices to gradually start rising as the unemployment rate begins to decline, CBA senior economist Garrett Arad said in a recent note. I mean, there you go, we have it. More calls, predictions that property is going to go down. I don't know how they're going to... Well, we're not going to see the true effects of unemployment until later this year, till all the support mechanisms are removed, till the ability for businesses to trade insolvent is also removed. So I think September to February, that's going to be the interesting period to watch, everyone. This isn't going to be a fast-moving process. This is going to be slow. It's going to take a while. And there's going to be a lot of FOMO. You got to fight the FOMO. Another big factor that will see property prices slide further is closed international borders. New dwellings that were being built to keep up with yearly population growth will sit empty without net migration. That lack of demand will further lower prices. And I had a viewer send me some stuff in the comments. And you know what? I will just literally, not in the comments, he sent it to me on Facebook. I'm going to take a screenshot of what he sent me just to show you here. And we'll bring that up. These are luxury cars, of course, covered in dust in a, residential precinct aimed at international students. And I'll show you some here. They haven't been moved for months, guys. Apparently the local takeaways even answer the phone in Chinese. That's the target they're aiming at. There's a whole other sector there. All the international students. There's property built just for them. There's investors that have piled into it just for them. Apparently it's been empty 90% since it was finished. And the car's just sitting there getting dust. So what's going to happen when people try to sell those properties? Who's going to buy them? Would you jump in now on, investment grade stock, student accommodation, where they don't allow normal people to occupy them? You're limiting your intake. Do you think international students are going to keep turning up? That's another thing. I've got another article we'll look at today that the international borders are going to close till 2021. So home buyers getting interested. As the pandemic curve flattens, confidence is returning and interest in the property market is growing. Visits, of course, to realestate.com.au have doubled since March low. I mean, that's all the... Every bloody time. It's all to do with website traffic, guys. It is. I wonder how many of that's bots. It looks like people have become a little bit more serious about being prepared to buy or sell real estate, REA Group's head of economic research, Cameron Kusher, said. Because there isn't as much stock on the market, people are much more engaged with the stock that is there. And that's why we're seeing this high level of engagement. Or they're bored at home. Got nothing to do, so they're going to look at property porn. I mean, that's Australia, isn't it? We're property obsessed. Just look at all the TV shows. But we're still not seeing too much activity in the transaction numbers. Oh, funny that. Oh, boy, I'm shocked. I'm shocked, everyone. I'm going to faint. Hang on, I got to hold on here. Got to have a coffee. Yeah, that's what really matters. Okay, search traffic is not really it doesn't translate. I mean, sure, it'll probably increase their ad revenue, but good on them. But still. But if property prices continue to fall, even people like Miss Wraith, who are locking in a better home loan rate, might still feel the heat from the declining value of their real estate. For now, though, she considers herself one of the lucky ones, entering the first recession in a generation with a lower interest rate. I think I've had it really, really good, she says. I'm very lucky and I wish other people were in a similar situation. Well, this is the thing. It's all good having a lower rate, but what if her investment property in Melbourne doesn't get occupied? What if the high density housing is, like the example here sent to me by a viewer, is full of luxury cars that haven't been driven around by students? And there you go. I still couldn't understand when I was studying how all these foreign students could afford all these perks, and then I realized, wait, mum and dad pay for it all. It's a bit of a class difference there, a bit of a class difference. There was a friend from Malaysia whose parents were, in a club, and I so what? You go play golf. I didn't realize that that was a much bigger deal in their nation than ours. So there we have it, everyone. Falling prices in property, which are forecast to happen, are going to limit people's ability to take advantage of these loans, these lower interest rates. And I've been talking to the broker I spoke to about that for months. And think about it, small businesses as well. They're going to have an even harder time. And then we might start seeing forced sales, or people are going to be holding on paying 4.5% rates when everyone else is getting under 3%. That's got to sting. So, move fast, everyone. Take advantage of these lower rates. Let us know what you're doing in the comments below, and where do you think this will all lead. Thanks for watching. As always, please like, share, and subscribe to the channel. Let us know your thoughts and opinions in the comments below. If you're a fan and want to support the content I create here, there are a few ways you can. You can join the channel on YouTube or Patreon. You can support us via our affiliate links at Amazon or eBay, or Independent Reserve and Kucoin. You can buy our merch from HeiseSays. You can use Gold Pass from the Perth Mint, or you can support us via PayPal. Thanks, everyone. I'll see you next time.